Most of us in financial markets are aware of the big crashes. We study them and we try to learn from history. But are we entering a similar time, what is called the calm before the storm? And as financial stress indexes go to lows that we have never seen before, should we be worried? In today's video, we take a look at why uncertainty is starting to creep back in when it comes to some of the biggest hedges in the world. And while we've been bullish on them for the last 18 months and they continue to push higher, are there warning signs on the horizon? There's a lot to discuss as we enter into the thick of earnings season and of course see some wild moves. In today's video, we'll take a look at where the biggest trades and transactions have been going right now from Wall Street. This one is not to be missed, guys. We'll see you in a moment. Well, welcome back everybody to The Daily Show, where we bring simplicity to the complicated when it comes to markets by finding the largest trades and sharing them with you. In today's video, we have to discuss, of course, what just happened with Nvidia, why Google had a little bit of a part to play, and of course, how the market continues to look very strong in a couple of sectors right now that we've been discussing. But before we start any of that, let's talk about seasonality and where we're at. Because of course, we're in February and this tends to trade a very particular way when it comes to first year presidential cycles. And of course, that can be down. As you can see here, according to the stock trader Almanac over on X, you'll notice that a lot of years we do see a pullback in February. We've already warned in 2025 that we might be in for an up, down, and all-around market, and so far that's exactly how it's been, with tweets, all sorts of geopolitical news, and of course tariffs coming in and out of play literally by the second. But let's talk about what tends to happen. We usually get a bit of a run-up into Feb, and then we tend to see a sell-off. Regardless of any of this, though, the market remains usually in a sideways action, and then continues to usually push higher after that period of time. So will that happen again in 2025? Well, let's look at the good and the bad kind of notes here. In terms of February's by all performance since the 1950s, Grant Hawkridge has a great chart here showing that the start of Feb can be kind of bullish and the back end of Feb can be kind of bearish. Something to keep in mind if we see, and ultimately we will need to see, the price action break key levels. Of course, for now, the latest options data is pushing us to believe where we're moving into positive gamma. But it's very important to always look for the price action, look for those triggers that show Wall Street's money is moving in a certain way. Remember, we always say on this channel, if it's in the press, it's in the price. And more importantly, we need to be patient to react to the flow rather than the news narratives. Now, speaking of news narratives, you might be under the impression that everyone is not spending and everyone is not doing things in this economy. Well, according to the market, as we've already looked at several times before, the American consumer, at least according to the market itself, seems to be rocketing higher. We've actually got all-time highs moving up here when we're looking at consumer discretionary versus staples. And as we've long argued, that is usually meant that the market is going to push higher in terms of earnings. And it also can mean that maybe we have less financial stress. Now, why could that be? You might be thinking, well, people's wages aren't really going up that much. Services are ridiculous. Inflation's crazy. The cost of eggs is out of control. And I just, want to be able to afford things like I could back 5 to 10 years ago. Well, the answer is quite simple. It's debt. And people are taking on over debt that they cannot afford to repay. We've seen this in credit card stats that we've shared recently. And of course, we've seen it in so many people taking on loans for absolutely everything, whether it be housing, cars, or something else. Now, for the time being, it looks like the calm before the storm. You can see here this chart, and of course it is inverted, has just broken through to a period that we haven't seen in 17 years. And you guessed it, when was the last time we saw it? The calm before the storm, just before the global financial crisis. So is it all green or good for now? Well, the answer is quite simply multiple ticks. Yes, people are taking on debt. People feel pretty good right now in the markets. And clearly it's being represented by what Wall Street's flows have been showing. But this is one of those periods that you need to be most terrified about. Are earnings doing better? Well, let's take a look at that in just a moment. But remember, it is also about understanding that when everybody feels great, should you start to then be saying, well, maybe I need to sell into that? Remember the old Warren Buffett quote, be greedy when others are fearful and fearful when others are greedy. Could we be entering that market into 2025? As we've argued, this year will be a little bit tougher than maybe 24 or 23. Well, the good news here is that earnings are doing exactly what we suspected they would just since the start of this year, and that is beat expectations on the forward guidance. You can see here the latest chart is actually ticking up, and this is exactly what you want to see to take us into that last 1/3 of the move through a standard bull cycle period of the market that started in October of 2022. Now, this is a very important read, and so far, so good for earnings. Of course, there have been some blips in Google and AMD and a few others, but generally across the board, most companies are beating, and the market is loving what it's seeing. Now, where will this continue into for 2025? Well, of course, the argument is small and mid caps. You'll notice that there's a lot of emphasis being put on these particular sectors, as we've discussed in the previous video, and of course, more recently, that this will be where Wall Street potentially starts to move flow. And we've already started to see that when you take a look at the S&P 600 versus the 500. So that's basically taking the smaller mids and saying, you know what, if we get rid of the Mag 7, are we going to actually see the market holding, or has it been underperforming? Well, the answer is, if you have owned just the 600 and you haven't owned the S&P 500, that is, you haven't owned the big companies, you are underperforming. So big time too, 36% from the peak to the trough so far. But you'll notice this has happened before, and we're now starting to hit into the echelons of going over the median and over the average. So what's happened over the last 2 months in particular, especially even 3 months almost arguably here, is we've seen these ratios stay stable. And in our previous video, we discussed that, which could mean, and I think it does mean, interesting to see what you guys think in the comments down below, that Wall Street is accumulating a broader base of assets. That is, they're buying different markets. They're not just buying semiconductors anymore, which have been stuck for quite some time since basically May of last year. They've been broadening their base now for the last 4 to 5 months and purchasing healthcare, purchasing industrials, purchasing agriculture stocks. They've been buying other sectors, which is a classic staple of an expanding earnings, expanding GDP, and expanding economy. Now, even if the economy is based on debt and everything looks absolutely terrible, and you probably can see it from a mile away, timing will be everything. And ultimately, that's what we'll be doing on this channel. So make sure to subscribe if you haven't already, so that you could follow the journey throughout this year as we continue to really spot some of these big things. Now, we have got, of course, earnings coming in for some of the biggest companies still this week. We've got Amazon, Cloudflare, just to name a little bit here. And obviously, the moves based on the options market are going to be extreme, 6.5% and 11%. Now, these are some big numbers and certainly something that we need to be paying attention to. But let's go back and say, okay, what just happened this week? On Monday, everybody was discussing tariffs, and obviously we didn't see the stock market fall as much, although it did get hammered in small caps. But it particularly got hammered in crypto. And we initially said, hey, this is the biggest sell-off liquidation we've ever seen in the crypto markets, $2.2-ish billion. Well, as it turns out, the number was much bigger. Yes, I posted over on X today, follow us in the links in the description down below, that the likelihood of the number is between $8 and $10 billion of actual liquidations. And as it turns out, things like Bybit, which shows up here as this much liquidation amount, actually reported $2 billion of liquidations. Binance was $2 billion of liquidations. So we'll hopefully start to get a bit more transparency in this market as we're getting APIs improving here. Supposedly the limitations on them were the big issue. But what this shows is it was an absolute direct attack on retail traders, because some of the stops that were taken on Solana, on XRP, on Ethereum in particular, not so much Bitcoin, were classic sweeps. And this is the type of thing that often bottoms the market. So it could be good for crypto for now, but also it worries you because it just shows you how many whales, and also that Wall Street is fully involved in these crypto markets. So expect all of the problems that come with steals in other, Wall Street dominated markets to now be a huge part of course, what we're seeing in crypto. Now, speaking of crypto, do we generally get a pretty good February? Well, the arguable point here is 82% of the time, Bitcoin is up during the month of February. And while you might say, well, that may not happen this time around, remember, price action plus data is really important. It's something that we've built the bedrock of this channel on. And, by the way, guys, we're getting on 5 years. So thank you so much for the support there on being able to do this daily show and making it pretty much one of the biggest in the world. So thumbs up for that. But let's take a look here at the data, because basically it shows us here that if Bitcoin's going to continue on and the crypto market's going to continue on, February is going to be a pretty important month for it. And as we mentioned, 82% of the time, it's the best month other than October of the year. And we used that October stat last year, remember, with price action to really show that Bitcoin was ready to rock. And boy, oh boy, was it. We ended up getting some pretty big numbers there. Now, speaking of big transactions, I'm just kind of bringing this up. Huge dark pool on, of course, Ethereum funds. As we saw the lows this week, we've got a lot of transactions from some pretty big names, and inflows seem to be pretty strong, particularly in the ETH side. Take a look at this. This is now the 4th of February data that we've got, and it is a monster number, actually in one day, almost eclipsing the entire week of 7-day inflows. So huge numbers coming out of Ethereum. It seems like there's more interest in ETH at these prices than there is on Bitcoin. So I think that is a little bit telling, especially when you look at the price action, which we will do later on. Now, we have followed one particular pair, more so than almost anything else other than, of course, the stock market itself, and that's been gold. You know, I've been a monstrous bull on gold. I have many reasons to be so. You know, we can kind of tell that we're in a geopolitical tension time, and gold has frankly been a crap asset if you owned it during the wrong times. The times when everyone turns to be bull is usually not when you want to, but it sat for well over 10 years. Now, why is this important? Because, of course, gold has been pretty much eclipsing most people's gains, but we're approaching now and getting closer to that magical 3,000 level. And it does look like there are a lot of dark pools coming in right at the peak here for gold. And you have to pay attention to this. Now, these are, of course, on GLD, so these are on an ETF for gold. But I don't really love it when people place huge amounts of transactions all around the same price. So, of course, we will have to continue to watch this. Am I still bullish gold? Yes. Is the trend still up? Yes. But this could be an early dump. So just watch out for that as we approach basically one of the most important numbers ever to be reached by the metal, which is that round 3,000. Will it stop just before, then consolidate, then potentially move on? Yeah, I think we're going to beat 3,000, frankly, but it is an important factor here. There's going to be a lot of discussion, a lot of news, and a lot of articles coming out very soon. Now, were we earlier? Were we early on this trade? Of course we were. Good work, guys. Dollar was probably the key. We found some weakness there in the US dollar only a couple of weeks ago. Since then, it's really found that topping base there, and that's led on to some amazing data for gold. In fact, this was only taken, 3 weeks ago, 4 weeks ago, just before the breakout. And you can see the 12-month read on gold could be phenomenal if it's going to follow some of the history. Now, what has that meant? Well, it's meant that people are buying certain stocks, and they're particularly buying gold over the last 24 hours. Gold stocks up 2.5%, and now it is the best performing major sector over 5 days, which is 8.28%. So pretty nice stuff there. And obviously across the board, you'd have to say this isn't exactly what you would call a sick market at this point. A lot of defensives, a lot of risk on, same as semiconductors and stuff. So it's, I would say, a pretty okay market in the face of all these tariffs that are currently going on. Now, speaking of okay market, let's now have a look at the flows that have been going through in terms of options and, of course, the price action itself. We're approaching some of the key levels. 6,100 comes to mind multiple times. Obviously, keep struggling around there, and you'll find out why in a moment. But you can see here that it's come off the trend line base. It's found some buyers for now. It's filled the gap. And really, you've got to look at the futures action to see whether it's going to be able to continue to do this. And so far, it's so good. It broke 60.40. Of course, if you look at the daily, we've got pretty strong wick rejections coming off every single time it gets into these 5,900 levels. And as long as it stays within the boundaries that it's in right now, between 59 and 6,100 plus, it's kind of okay. I would say it's neutral up, and nothing really looks too worrying. So, of course, this is going to be an important factor as we look at the options. So where are the big options? Well, the puts for the next day seem to be sitting around 60.20. And remember, guys, non-farm payrolls, the jobs numbers for the US come out this Friday at 8:30 New York time. So that's probably going to be the catalyst to either break us up or to break us down in terms of the expectations of what the Federal Reserve is going to do. Will we get cuts? Will we not get cuts, etc.? All of those types of things will come through. But as you can see here, 60.75 over the next 24 hours. And more importantly than that, 60.70 seems to be now the strike that everyone's looking at. We're very close to that. So 60.70 plus, what do we enter into? You guessed it, we're going back into positive gamma. And what could that push? Well, you can start to see here, people have got some big calls on the market. Not only do they have 6,200, but it looks like for March, people are actually trying to price 6,300 calls. Have a look here. This is all of the expirations taken together. 6,200 still the number one strike, but you can see 6,100 also a very important strike. 6,000, 5,900, 5,800. All three of these levels on the put side are really important. Why we've been focused so much on that 59, 59.50, particularly for buys. And if we get through 6,100, you can really see it could start to feed upon itself. So in the face, I basically say whenever markets go up, usually they have to go up in a wall of worry. If there are concerns, people are worried, it's harder to buy. That's usually what makes a good bull market. And in this case, we've still got an accommodative Fed. We still have tax cuts potentially and deregulation. We have great earnings at the moment. And really the elephant in the room is geopolitical tensions and tariffs. So if you kind of ignore that, I guess you could look at this as still all green, all good on the markets. Obviously, it's difficult to do so in the face of so many concerns, big valuations, historical kind of stuff like this, and possibly even the calm before the storm from that almost terrifying read on the financial stress index. Now let's talk about some other stocks. We'll look here at, I guess you could say, Tesla first, and it is suffering. And I can't say we didn't kind of suspect this. Yeah, 380 is around the buy area for some people, but it did drop 380. It didn't drop 373, which we'll look at soon. You can see 373 is the most struck put this week. But if it doesn't hold here, we could be at 330, 340 very quickly. A lot of negative press, a lot of sentiment. Obviously, you could argue it's not a car company anymore and it's going towards, full on AI and everything like that. But let's be real, there are number problems. Here in Australia, less Teslas being sold as Chinese manufacturers absolutely dominate the space. And of course, we're seeing similar articles coming out of some of the European countries. So this is a concern. And of course, it's starting to push through in price action. But ultimately, follow price action. Let's see what happens. If we push lower here on Tesla, which I suspect we may, then 330, 340 could be a very interesting zone for those of you that are bullish on Tesla. Let's now break down what's going on NVIDIA. 125. We go straight into the call wall, guys. And no surprise. So this is a big, tough level for it. 125, 130. You guys can see all the calls. We suspected that people would buy this. We also thought that the Google news, which was basically, we got to spend more money on AI, guys. The market hated it, but that's what it was. We got to spend more money on AI. Well, guess what? The NVIDIA position went up on that. And I think it went up on that anyway. And this is a good sign for NVIDIA. People are worried about demand based on DeepSeek. I don't think there's any concerns of demand. And we've kind of consistently said that. For now, valuations are a different story. Let's now take a look at the leads. So we've still got a little bit of concern here in the bonds market with options, but credit spreads, like that is spreads between treasuries and high yield junk, are so tight. I would never buy high yield junk with a 10-foot long pole. I wouldn't touch it at all. And I wouldn't touch it for the last couple of years. Yes, I know it's been going up, but I can tell you, it is a calm before the storm. People are pricing in almost no risk in high yield junk. And that is always a concern. Now, that can last for years. So you've got to be careful about that. But I'll tell you what, treasuries look a lot more attractive than high yield junk right now. That's for sure. Speaking of treasuries, we saw the 10-year drop. So the 10-year actually fell through. The dollar kind of got hit up as well. So the dollar is obviously getting a bit of a pummeling. And this is, again, against what you'd think about on the news. This is the head and shoulders you can see here on the treasuries. And it's left shoulder, head, right shoulder. Big transactions coming through. We saw that big transaction here, which we suspected may have been a sell, actually, and that we might push down to 86. But it looks like it was most likely a purchase because it's pushing higher, and this could open up $94 for treasuries. So it might be start time to talk about treasuries again as the US 10-year really does fall through. You can see here home builders as well, kind of finding base, and that's going to be an important one to continue to find base. Here's the treasuries, US 10-year. Yes, I know that obviously we're basing it on 20 years for the treasuries, but look here at the US 10. If we have a look at the US 30Y as well, you can see here big drops coming through the last 24 hours. So a lot of long curve coming down here. These are big moves. These are certainly significant ahead of non-farm payrolls. And of course, that is then affecting the dollar, which is now putting pressure back onto the downside. So again, against the news, against the narrative, but pretty much with what you'd expect from the price action. So if we end up getting below 106 on the dollar, this could be a huge storyline that can also push markets up. It can be more accommodative from the Fed. All sorts of things could actually start to happen. Speaking of that, weak dollar, possibly strong gold. We're starting to get a little bit extended here in this move. It's been very good. And of course, congratulations to anyone looking at this. We're 28.68. So we're getting really close now towards that 29.53K level. We've talked about how a proper breakout of that pullback in time, so this range here, would push around 29.53K. And for now, it keeps pushing up. But you got to remember, it is starting to move away fairly heavily from some of its known mean reversions. Things like the 20 weekly, which have been perfect buys recently. We are starting to move away from them. Silver, been very nice, getting again close to that first resistance, still pushing higher. Congrats to anyone on silver. So far, so good. Hopefully that keeps going up. And oil continues to be weak and looking kind of crappy. In our previous video, we talked about how this was most likely a supply short. And so far, it's put pressure on there. If it goes underneath, then we could be going all the way back down to 68.50. So oil, a little bit tougher trade. Probably the toughest trade since the election because of the geopolitical stuff. Tesla putting pressure on the downside. You can't like this chart. Could be wrong. Maybe the market will move up and things will improve. But for now, I'd be still sitting around down here. Something we've talked about since we saw that massive run. And of course, needs to be taken into consideration. Nvidia, nice bounce. 125 is a core wall pressure point. Most traded zone, good reaction to that. Obviously, we've seen strong movements here. You could even argue this is kind of like an island reversal with a gap down and a gap up. And that can bring momentum through. 130 plus breakout on Nvidia will be ultra strong. So of course, that'll be something that people are looking for. AMD managed to regain a bit. Going to watch this. Now, I noticed, and I looked for you guys, I was trying to find a big single transaction, but they seem to be just a lot of smaller ones. Look at the volume. Whoa, that's some big volume. Last time I saw volumes like this was over here. That's a big volume, guys. So somebody clearly was selling big time and someone was buying big time. And we haven't seen volume like this for a little while. Now, obviously, it is around earnings, so you always expect volume spikes. But if that remains very consistent, it will be a telltale sign that maybe that's the bottom in. I think a lot of people, unfortunately, will be slaughtered on AMD right now. I know a lot were up here, the 160s and 180s buying. And, I've liked it since 120, no doubt. But at this stage, we haven't got any price action. So it's more of a scale in. Remember, do it the way they do it. Scale, let the trade reward itself by actually doing what it's meant to be doing first. HSI and China, waiting probably for open next week plus non-farm payrolls, but consolidating around the resistance. No real problems there. US 2K coming off the bounce, very nice, putting pressure right on the res at this stage, 23.20. Looks good. Could see some nice upticks here for US 2K, and obviously people will be targeting those highs. So it's looking all right. NASDAQ, looks like a crapshoot. The thing is up and down and all around. So there's nothing really going on here that makes me super excited. I think single stocks in tech look a lot better than NASDAQ. And then when we go to the crypto market, obviously we've got the trend line here. We don't have any breakouts. 221 on Solana would be nice. Ethereum obviously remaining relatively good considering that huge wick the other day, but it will want to go under above the mini level here of 2950-ish. And Bitcoin, of course, also struggling a little bit after that sell, needs to move above 103, 102.50. So look, no doubt Bitcoin needs to find some bids again. It did have that mega crash. It needs to find bids so it can get that momentum forward. And of course, we know sentiment can shift just like that. A lot of people got liquidated. We now know it could be in the 8 to 10 billion range. A lot of that's retail. So people are hurt. Hopefully you guys aren't. But this is what does happen. It takes a little bit to get the sentiment back. But if you get price action, a lot of those people revenge trade back in. So yeah, could move very quickly if the right levels are broken. And of course, on the show, we will be watching them. Do remember, guys, this week is non-farm payrolls. It's coming out very soon. Sometimes the day before non-farms can just kind of be like sideways and slack. We will see what happens there. If you are from Perth, Australia, or Brisbane, come out to our free events. We've got them running in February. Slots are starting to fill up, so make sure to do it quickly. And it's completely free to do so. Drinks provided by us. It's going to be a fantastic session. And we are sharing something we've never shared before. So there's an extra incentive for you to come out. I think you'll enjoy that. Follow us on X. Follow me on LinkedIn as well if you want to find out more things to do with psychology, trading, and investing. And thank you so much for watching. We'll see you in the next one, guys. Bye for now.